Let's take a look at some charts for a brave new coin on this setup Monday. Man, what a weekend we just had. A plus and minus 25 to 50% intraday, minus 50 to 60% in the week. Selling into nothing. Liquidations, not even the cause here. Most of the liquidations happened on this first wick. Now this is capitulation. This is DeFi sell-off. This is margin longs getting called, that sort of thing. And we have this additional China stuff, which every 5 minutes I'm hearing different information about. If you haven't heard yet, there has been some sort of shift in mining policy in China. Chinese miners will tell you it's not a big deal. People in the US will tell you it's a big deal. I don't know what to believe. All I know is I got a chart here and I'm better off on my deserted island because because China's just a black box in regards to everything. So we don't know what we don't know. We won't know until we know it. But whatever happened appeared to have spooked a decent number of people in a way to bring them to sell. And this was mostly on spot. This wasn't futures. There was OI is down to nothing, open interest, very little liquidations relative to the other day. So the market might be wrong, but you just gotta take it, right? If we're selling off back to 31 or 32, that is what it is. Anyway, so here we are. And I'm looking at this. We got a high. We got a temporary low here. Hopefully for a good while low here. We pick a high, we pick a low. We get a 50% retracement. Anything above this is going to be bullish territory. Anything below this is going to be mean reversion territory. It's around 47.5. Probably going to see that number pop up on a bunch of stuff TA-wise. 42 is another big level because that's the 200-day moving average. But we can basically range this entire zone and still be pretty bearish, arguably, and be above 48 and be okay. Now, intra-week, we can look for things like an inverted head and shoulders, which I'm seeing on BTC and ETH. We were setting up for this Adam left and potential Eve, and then that China news happened, or sell-off, or whatever, right? One thing that's important to realize, I think, is that these sell-offs, when they happen, take quite a long time to recover from, if we are going to recover from them. This was a relatively minor sell-off. Happened relatively slowly, took 30 days. This happened quickly, took 50 days. I don't even remember what this was, what this was from. And this was obviously Corona March, and that took 50 days to recover from, basically from the dump. So a 30 to 50 day recovery would bring us into mid-June, early July. So my non-investment advice would be take some time, be patient. The market will tell you in 30 days, I can guarantee you, I will have a much better understanding of what's going on here trend-wise as these trend metrics catch up with everything. We're pretty far below the 200, but not, if this is a bear market, this is nothing compared to where we could get. Look at where we got above in the bull market. But the 5200 isn't even crossed bearish yet. So we have that to look forward to, and those headlines to look forward to, and those fun analysts who pay attention to only the 50 and the 200 to scream at the mountaintops that this is a bear cross up here. And historically, I don't think they've performed too well as far as crosses are concerned, if you're just shorting the cross. But it's extremely likely at this point that that cross does happen eventually. The good news, the silver lining on all of this, is that the trend metrics are undoubtedly bearish or flipping bearish. And when they flip bullish again, like they did again in March, in Corona March, April, obviously we were above the cloud, right? Right now we're obviously below the cloud. We're not in the cloud anymore. We're not maybe in the cloud, maybe outside the cloud. The cloud is a dynamic support resist system. It tells you, are we bullish? Are we bearish? Is it a good time to be long? Is it a good time to be short? Right now the cloud is telling me that it's a good time to sell any highs. Anything that gets close to 46, 47, 48 looks like a sell to me based on the cloud. And just taking a step back, look where the cloud gets you in. It gets you in sub 10, gets you out at 55K. Now, if you don't think the cloud is a valuable indicator in these settings this time frame, I don't know what to tell you. Sure, does it get noisy? Are all the trades amazing? No, but the ones that are pay off for the ones that aren't. So anyway, cloud, I'm proud of the cloud. That's what I'm going to say here. I'm proud of the cloud. If I would have listened to it, which I say this every time I don't listen to the cloud, I think, man, what am I doing? I'm the cloud guy, and I'm not trusting that I should be closing up here. Because even if you're wrong, right? Even if this goes higher, the cloud's going to tell you with a TK cross recross that you should be long again. So you should always just listen to the cloud. That's really the bottom line. So right now it's telling me, be careful with the longs up here. You're going to see mean reversion. You're going to see people buying dips and whatever else. But just be careful in that regard. And ultimately, at this point, I don't want to call 18K or anything like that. I don't want to call any new lower lows. This is an if this then that situation. If we break 30, everyone really is going to be looking at 18 to 20. If we break 18 to 20, I will be selling my liver, my kidney, my retinas, anything I can sell sub 18, because historically this 730 MA has been on the money telling you this is a buy zone. Now it may dip way below, it may take an extended period of time, but buys down here have been the best bargain historically, just as sells above the multiplier have been great sells. Now we got close to that, but we didn't exceed it. So that really was a failure on the possibilities here. We didn't, this would have been a great sell, obviously, right? 59. We touched it, we grazed it, we didn't exceed it. I was really hoping and expecting better sell opportunities when we exceeded that. We didn't get that. Superimposed on the MA multiplier, I have the pitchfork. Pick 3 points to get a rate of change. Pitchfork very similarly is telling you sell zone up here, buy zone down here. Hey, that's 18, that's 15, whatever. There's some gross yearly pivots at 12. I don't want to go to 12, okay? I don't think anybody wants to go to 12, but it's good to know that when I go to bed at night, there's support at 12K. There's support at 20. I think that's like 21. We really don't want to lose this, because if we lose this yearly pivot at 37, we lose, or likely to lose, this midline support on the pitchfork. And I'm just looking for confluence and support here on this stuff. So right now, we're okay if we can hold this. If we can't, we start dumpster diving into 30 to 17 range. So I'm not saying we're going there. I'm just saying be prepared, okay? Scout's motto, or whatever it is, be prepared. If we look at on the 4 hour, intra week again, this is setup Monday after all. If we're looking for the weekly setups, if you're trading this on low time frames, I'd be watching something like the 4 hour with some EMAs or some objective visual to tell you this selling is slowing down. We are flipping bullish again on trend metrics, at least temporarily. You can see how messy this got at the end of April. But when there's a clear trend, right? Like the no doubter, using trend metrics is one of the best ways to just see what's going on. We're just getting denied at this MA every time, right? This is the midline. This is the 5/8/13 alligator. And when this flips, that says, okay, it's a decent opportunity for some bull stuff. When we start breaking these fractals to the upside, this is a trailing stop loss on any shorts right now at 38 based on this indicator. And we have this inverted head and shoulders setup at 38. So there's some confluence there. And once we break 38, if we do, we're going to see this flip bullish again. So again, there's confluence, not to be confused with confirmation bias, but there's confluence here for a bull move if we get past 38. Here's ETH from nose to tail. Man, what a drawdown that was in a week. 50 to 60%. Alts across the board, 70+% basically the past few days. And now we have Matic up 100% today. I mean, where do you even begin? You have a dip that keeps on dipping, and then you have some coins that are confused as to what market it is. But this is an insane move off the bottom for ETH. This is like plus 50% move from the bottom, plus 45, something like that. So an incredible bounce coming off of Sunday's just dumpster fire of a lows. And again, we were setting up for this beautiful Adam and Eve, this V and this U. We had a weekly tweezer bottom going on. This wick right here, this is not normal, obviously. And when you see this represents cascade waterfall margin liquidations. So keep that in mind if you're unaware, right? If you don't know what's going on and you see this, most likely that is due to leveraged longs being liquidated forcibly at market. I mean, that's what it looks like right there. You're seeing a wick down to 1850 from 28. That's $1,000 wick. I mean, that's, something's going on there, right? So that was DeFi. And then we get this drop again after DeFi. So anything above 3K at this point is okay for ETH as far as bull territory, but I think we're going to squirrel around down here for quite a bit. Arguably, this is setting up for a massive inverted head and shoulders with the 3K neckline. Probably too early to tell. But the buyers, it's funny, the sellers all came in at once, and now the buyers are coming all in at once. It's like people are selling, there goes the liquidity, I don't want anything on the order book, let it go, and then let them get exhausted. Here come the buyers. Very, very interesting market dynamic there. Here's the ETH MA multiplier. Again, it got close to this top, but didn't quite exceed it, so I didn't get the sales I was looking for. I guess something to keep in mind is have a little fudge zone around this area. If it gets close, that's when you start your selling, now that we've seen evidence for that on ETH and BTC. Alternatively, this could be an argument for, you know what, we haven't seen the top yet. We're going to exceed this. We're going to go to 5K. I don't necessarily ascribe to that belief at this point in time, but you can't rule it out, right? We're still pointing up. We're still pretty close to the midline here. Downside for ETH is 1K. Upside is 5K. So it's like a risk reward ratio of like 0 because it's 2x bottom or 2x top. So it's not really like a great entry here. But again, if ETH gets close to this level down here, you have to be a buyer, not investment advice. Historically, anything below that's been a good buy zone. As far as intra-week, on the low time frame MAs, we are flipping bullish or trying to. On this low time frame, we did get a stop loss short trigger here. Just a lot is happening on ETH very quickly on both sides of the book. It's probably just a thin order book. A lot of people got spooked, a lot of people scared, market makers sort of in shock as well. So again, this is going to take 30 days at least to figure itself out. ETH BTC needed a pullback. It had 1, 2, 3, 4, 5, 6, 7 weeks of green. And it went from the bottom to the top of the pitchfork. Again, pick 3 points to get a rate of change. This is where price wants to live. Overbought, oversold. And for me, it's not a buy until it's closer to 0.5. Like if I'm trading this, which I don't, because I think it's untradeable for the most part. But pulled back where it should have. It pulled back at the R5 yearly pivot almost exactly. So if I'm looking for a trade up here, I'd want to see some sort of ascending triangle, some sort of pattern. What you don't want to see is an inverted Adam and Eve. You don't want to see an inverted cup and handle. You don't want to see a diamond top. You don't want to see any of that stuff up here. It's way too early to tell. This is going to take 6 weeks to really make sense of this, most likely. We just came out of this multi-year, arguably, inverted head and shoulders, if you're believing in that. That broke up around 0.4. So we had our multi-year consolidation, we had our move, now we need consolidation. That's how this works. Welcome to markets, right? One big concern for me intra-week is the Dixie, DXY, the dollar index. Now, crypto hasn't responded to the decline in the DXY. The correlation there is really broken down in a bad way if you're bullish, because the Dixie continues to decline, and yet crypto hasn't really responded. Now, if we get another stimulus in the US, which I don't think we will, but it's probably not off the table, if that happens, Dixie's going to drop, and BTC crypto should moon off of that. But what I'm seeing on technicals for the Dixie is a falling wedge with a multi-week bullish divergence. So in a vacuum, on my deserted island, looking at this chart, not looking at the ticker necessarily, but just saying, okay, I know what this is. I know how to trade this. The technicals are telling me this is going to break up. This is a bullish divergence. Bears are weakening. So if this does flip bullish, the question is, how does crypto respond? Right now we are basically uncorrelated to the Dixie. But if this flips bullish and everything goes risk off, if SPX and NASDAQ sell off, if gold starts popping up more, I don't know how crypto is going to react to that. And I fear that because of the recent events, people are just going to go more risk off on crypto stuff. So keep that in mind. It's a sensitive time for information. Volatility is extremely high. The market is ready to just reverse or traverse anything in a few hours' time. Be patient. Take your time. Don't sell the bottom like I did. I sold 1,800 ETH and I sold 3,200 BTC. Not a lot, but a decent amount. And it doesn't feel great to sell the bottom, but somebody's got to do it, right? So here we are, So take your time. Be patient. If you want to check out how I'm trading this, most of the time my personal account trades mirror the Enzyme.finance stuff, ETH BTC fund. Currently, we're still up since January, I believe. So we're up 40% since January. And at this point, I'll take that. I think that's decent. Now, this is a mixture of ETH and BTC. You can see AUM performance, allocations. You can see all the trades I make. Through DEXs, you can see deposits, withdrawals, that sort of thing. We also have a DeFi fund portfolio, which hasn't done as well. We just started this one in April. So it never really got a chance to do its thing. Kind of a failure to thrive. Since April, DeFi's kind of done a bunch of nothing. And then we got our clock cleaned in the past couple days. But hey, it's looking up on the DeFi stuff at least. Makers up 19% on the day. Right? Like, what are you going to do? What do you do with this kind of volatility? How do you set stop losses? How do you manage this, right? You either eat it, you either keep buying dips, knowing that this might go against you slowly. But if your conviction is there, which it is for us on the DeFi fund, if we think these are productive assets that are going to do something and going to be around for a while, like some of these swap tokens, this lending and borrowing stuff, I cut band yesterday and I cut half the ZRX. I just felt like I had to cut something. Go a little risk off, at least acknowledge what's going on here. But everything is up pretty big for the most part, even ZRX. So anyway, that's all I have for this one. If you want to participate in these funds and portfolios, you can deposit ETH or USDC, and it goes into a smart contract where I have the ability to trade that money through DEXs. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.